How does making an RRSP contribution lower your tax bill? Let's use a simple example to explain. Susie's salary works a typical 9-to-5 job where she earns $50,000 per year. If she lives in Saskatoon, her income tax that is deducted from her paycheck for the year is $10,195, according to Ernst & Young's handy online personal tax calculator. That leaves her with an after-tax income of $39,805. Her brother, Sam Y's salary, works at the same company but earns a little bit less, $45,000 per year. The combined federal and provincial income tax deducted from his paycheck for the year is $8,445, leaving him with an after-tax income of $36,555. As you probably know, the more you make, the more tax you pay, all other things being equal. So here's why an RRSP contribution can generate a refund after you file your taxes. An allowable RRSP contribution can be deducted from your income. In other words, your income will be lower when calculating how much income tax you owe for the year. If your income is lower, your income taxes owing would be lower too. To make this clear, let's say that Susie's salary makes a $5,000 contribution to her RRSP. Since that amount can be deducted from her income subject to tax is $50,000 minus the $5,000 RRSP contribution for a new total of $45,000. As we've seen, the tax owing for someone with an income of $45,000 is $8,445. But remember, Susie had paid the $10,195 of income taxes owing for someone earning $50,000 over the course of the year off her paycheck. If we take what she's paid, $10,195, and subtract what she owes, $8,445, we get $1,750. So again, all other things being equal, Susie's salary will get a tax refund of $1,750 for making this $5,000 contribution to her RRSP. It's important to note that down the road, hopefully not until retirement, money taken out of an RRSP or RIF counts as income on your tax return and is subject to income tax at that time. Deferring having to pay tax on income until retirement can be advantageous if you expect to be in a lower tax bracket, but for lower-income Canadians, that income can reduce income-tested benefits that may be available. Make sure to speak to a qualified financial advisor or accountant to see if RRSPs are a good idea for your particular situation.